Most people believe investing is only for the rich. They imagine expensive suits, complex charts, and thousands of dollars sitting in accounts they don't understand, and because of that belief, they never even try. They tell themselves, "I don't earn enough yet," or "I'll start when I have real money." But that one sentence quietly delays their financial future for years. The truth is painful but simple. It's not the lack of money that stops people from investing. It's the lack of belief. Belief that small money can grow. Belief that learning matters more than timing. Belief that starting imperfectly is better than waiting perfectly. $50 doesn't feel powerful. It feels small, almost embarrassing. You can spend it in minutes and forget it by tomorrow. That's why most people underestimate it. But investing is not about the amount you start with. It's about the habit you build, a habit that says, "I'm choosing my future over my comfort today." When you don't invest, money only has one job: to be spent. When you invest, money learns how to work, and once money starts working for you, even in small amounts, your mindset begins to shift. You stop seeing money as something that disappears and start seeing it as something that multiplies. Many people wait for confidence before they begin, but confidence comes after action, not before. No one feels ready the first time. Everyone feels confused. Everyone makes small mistakes. That's not failure, that's education, and education is far cheaper when you start small. Your first $50 investment isn't meant to make you rich. It's meant to teach you how investing feels, how patience feels, how discipline feels, how emotions react when numbers go up and down. These lessons are priceless, and learning them early saves you from much bigger mistakes later. Fear stops more people than lack of money ever will. Fear of losing, fear of choosing wrong, fear of looking stupid. But money punishes hesitation far more than it punishes mistakes. Doing nothing guarantees zero growth. Doing something gives you a chance. Investing with $50 is not a financial move. It's a psychological shift. It's the moment you stop saying one day and start saying today. And that moment changes everything. Once you decide to start investing, the next fear appears immediately. Where do I even put my money? The internet overwhelms you with advice. Stocks, crypto, mutual funds, ETFs, real estate, trading, apps, platforms. Everyone sounds confident. Everyone promises returns. And suddenly, that simple decision to invest $50 feels complicated again. Here's the truth most people won't tell you. Your first investment choice is less important than the fact that you start. Beginners don't fail because they choose the wrong investment. They fail because confusion scares them into inaction. So instead of searching for perfection, focus on simplicity. For someone starting with $50, the safest place is not hype-driven opportunities. It's broad, boring, long-term assets, things that don't require daily attention. Things designed to grow slowly, not explode overnight. Exchange-traded funds, basic index funds, or diversified market funds exist for this exact reason. They spread your money across many companies instead of gambling on one. Why does this matter? Because beginners don't just invest money, they invest emotions. Watching a single stock rise and fall can trigger panic, excitement, and impulsive decisions. Diversified investments reduce emotional swings and allow you to focus on learning, not reacting. Another powerful place your first $50 can go is knowledge-based investing. Platforms that let you invest small amounts consistently teach discipline. Automatic contributions, fractional shares, and long-term holding quietly build habits. These habits matter far more than short-term profits. Avoid the trap of chasing fast money. Your 20s and early investing years are not for gambling, they're for building foundations. High-risk investments promise speed, but they often teach the wrong lessons. Slow growth teaches patience. Patience builds wealth. It's also important to understand that investing does not mean constant buying and selling. Trading is a skill. Investing is a mindset. Beginners confuse movement with progress. Buying once and holding consistently often beats constant activity driven by emotions. Your first investment will not change your life financially, but it will change how you think. You'll start paying attention to markets. You'll begin understanding how money grows. You'll stop seeing investing as something distant and start seeing it as something normal. And that shift is powerful. Remember this, the goal is not to impress anyone with returns. The goal is to build a system that works quietly while you live your life. Investing should reduce stress, not create it. Your first $50 is not about money. It's about identity. You stop being someone who only earns and spends and become someone who builds. This is the part most people misunderstand. They believe investing works because of luck, timing, or intelligence. They imagine someone making one perfect decision that changes everything overnight. But real wealth doesn't grow that way. It grows quietly, slowly, and patiently through consistency and time. Your first $50 matters not because of what it becomes next month, but because of what it represents over years. When you invest once, you prove it's possible. When you invest again, you create momentum. And when investing becomes routine, wealth stops being a dream and starts becoming a process. The real magic of investing is not in big numbers, it's in compound growth. Money that stays invested begins earning on top of what it already earned. Growth builds on growth. Progress stacks quietly, and most people miss this magic because they arrive late or leave early. Consistency beats intensity every time. Someone investing small amounts every month for years will almost always outperform someone who waits for the perfect moment to invest a large sum. Time rewards discipline more than bravery. At first, growth feels invisible. You check your account and feel disappointed. The numbers look small. Progress feels slow. This is where most people quit. They mistake silence for failure. But compounding is silent in the beginning and powerful at the end. The early years are not meant to impress you. They are meant to position you. As time passes, something changes. The growth becomes noticeable. Your money starts contributing more than you do, and eventually, the system you built begins to support you instead of depending on you. That's when investing stops feeling theoretical and starts feeling real. Your role as an investor is not to predict markets or chase trends. Your role is to stay consistent when motivation fades, to remain patient when progress feels boring, to trust the process when emotions try to pull you away. Mistakes will happen, markets will fall, fear will appear, but every downturn teaches resilience, every recovery rewards patience, and every year you stay invested increases the distance between you and those who never started. The biggest danger is not losing money, it's losing time. Every year spent waiting is a year compounding can never return. Starting small early is more powerful than starting big late. Your $50 is not small when it's combined with time, discipline, and belief. It is the seed. And seeds don't look impressive until they grow. Money is not just numbers on a screen. It is a reflection of your habits, your mindset, and the decisions you make when no one is watching. Every small choice you repeat daily eventually turns into the life you live tomorrow. That's why financial change never happens suddenly. It happens quietly, through consistency and awareness. You don't need to be perfect to move forward. You don't need to know everything before you begin. What truly matters is that you stop drifting and start choosing intentionally. The moment you become aware of how money works, you gain power, and power, when used wisely, creates freedom. Most people wait for motivation, confidence, or the right time. But the truth is, action creates clarity, not the other way around. Wealth is not built by dramatic moves or overnight success. It is built by people who show up, learn patiently, and stay disciplined even when progress feels slow. Your financial journey will not look like anyone else's, and it doesn't need to. Comparison steals focus, and focus is required for growth. When you stop chasing validation and start building foundations, everything changes. Stress reduces, control increases, options appear, mistakes will happen, markets will rise and fall, emotions will test your discipline. But every challenge you face teaches you something valuable if you stay present and committed. The goal is not to avoid mistakes entirely, but to learn early, correct quickly, and move forward stronger. Money is not about greed. It is about peace, peace of mind, peace in decisions, peace knowing that one unexpected problem won't destroy everything you've built, and that peace is created long before you feel ready. Remember this, your future self is watching. Every habit you build today is either helping them or holding them back. Time is your greatest asset, and once it's gone, it cannot be replaced. Use it wisely. This is Lessons of Wisdom, where money, mindset, and wealth are explained simply, honestly, and without illusions. Learn early, act intentionally, stay consistent, and build a future you won't need to escape from.